compare like for like. What we lose is the ability to compare multiple time frames of analysis. So when we have that as a basic idea, this is something that we can gain, but we also lose an edge during that process as well. To regain that edge, you know, this doesn't scale properly. Look, if I zoom in this out and out, it doesn't scale properly. Look, because it's all relative. So we can see that this is also very useful, but it also has less structure to it. We can see that oil becomes a sell trade here, can't we? We can see the difference in what happens here, because oil is incredibly bullish during this period. Yeah. And is now bearish during this period. So this is the problem, isn't it? Because we can see that, but we couldn't see that if it was on an RSI. So we recognize that the RSI itself has limitations. We can't see that same analysis on an RSI because it doesn't have that type of analysis. The RSI will analyze a period of time. This is us looking at whatever time we want to look at. So when we think about oil as a buy trade here, and then we look at oil during that period, we can see that that was a massive buy phase in oil. Oil went from $80 to $85. And since then, it's went from $85 and it's kind of hovered around $85. So there's always going to be limitations to the RSI. The RSI is never going to be as good as the physical eye is. However, the RSI is going to be more accurate than the eye is, because the RSI is doing a perfect job of analyzing the set period that you're analyzing, the set period that you're using. Way better than the eye can ever be. So there's a compromise here. We can see how good this is in terms of that buy trade, and we can see how good this is in terms of that net sell trade, but we can't define it the way an RSI can define it. And that's a good thing and a bad thing. So there's always limitations to the RSI, and we've highlighted the fact that we know that there's limitations to the RSI. We've had multiple conversations with Sam about the fact that there's limitations to the RSI, but the key to the RSI then is doing multiple time frames. So in other words, what I just showed on with Miguel there is looking at this from an hourly chart, a half-hourly chart, a 15-minute chart, a 5-minute chart, a 1-minute chart, and working through the idea of those parallel shifts into, you know, maybe value narrative divergences or otherwise. So, you know, there's absolutely limitations, but the skew itself, when you zoom in and zoom out, absolutely unbeatable, almost unbeatable in any trade you could ever have. Even this trade here that I don't like because it's too low in the water, if I'm going to do anything, it's going to be a sell trade. It's never going to be a buy trade. And if you look at what just happened to the oil there, you can see that it was a sell trade. It came off 26s. It's now trading 13s. So the skew is an amazing trade. But we highlight the idea that the RSI has limitations. It's always going to have limitations because it has this problem of a look back period. And it's all, you can't do anything about that. That's always fixed, but it's going to be a lot more accurate because it's going to be exact. It's not a guess about how much value you've got. You've actually got a full, easy to understand measure about how much value you've got, but from the look back period, and only the look back period. Only the look back period. So this is some of the key core concepts to any of these trades, is that we can recognize that there's always a value in it. And this is a skew as well. This is the swap dealer skew. And you can see the swap dealer skew here is massive for the sell. The swap dealer skew here is good for the sell. Black over the other candles is good for the sell. Black below the blue is good for the buy. So you can see that the skew gives us a sell trade here, and the skew gives us an exit price down here. And then the sell gives us a skew here, and the sell gives us an exit price in here, and the skew gives us a sell here. And we haven't actually seen an exit price yet on oil, have we? It still seems as if we've got a bit of sell side skew still to go in this as the short sales come in. And so there is a limitation, absolutely. I accept and understand 100% that there's limitations to an RSI. The whole point of the RSI was to try and make relative value analysis more accurate for people to learn that process. And if it makes it more accurate for people to learn it, that's not a bad thing. I think that's a good thing.